Welcome to this video where I'm going to be talking to you about my top 3 tips for first-time buyers. Now, first things first, it's important that you bear in mind that reaching out to a mortgage professional may be beneficial to you to help you through your home buying journey. Now, getting your mortgage documents together might not sound particularly important or even fun when considering your home buying journey. Now, it is important whether you're submitting your mortgage directly to a lender or whether you're using a mortgage professional to help you out. They're both going to expect a base level of documents before continuing with your mortgage application. Now, the first of them I'm going to talk about is going to be your proof of ID. Now, that includes proof of identity and proof of address as well. Now, proof of identity is going to look like a really clear scan of your passport. Now, proof of address is going to look slightly different. So that's going to be a really clear scan of your driving license with your address printed on it, or a utility bill, or a council tax demand if you're renting your current property. Now, the next set of documents we need to talk about is going to be proof of income. So if you're an employed person, that means it's going to be 3 months payslips and your latest P60 as well. Now, for that P60, it's important you request that nice and early on from your employer, just to make sure they have time to collate all the data and produce that document as well. Now, if you're self-employed, it's going to be your latest 2 years SA302s, otherwise known as tax calculations. Now, there's another document that goes hand in hand with this called a tax year overview. It'll be your latest 2 years to match those tax calculations as well. Now, if you do your own books, this should be available through your gov.uk website. And if you use an accountant, you can just request this directly from them. Now, moving on to the next set of documents, we're going to talk about 3 months bank statements. So this is going to be for your salary fed account. What I mean by a salary fed account is the account that your employer pays into, that'll be paying your salary into every month. If you're self-employed, it's going to be the account that you pay your salary into as well. Now, essentially, it's important because lenders and mortgage professionals alike are going to like to see that income coming in monthly or however often you choose to be paid as well. Now, it would also be handy if this bank account actually shows all of your committed expenditure leaving as well. Now, committed expenditure often looks like credit cards, hire purchases, personal loans, or anything that is committed and a monthly cost. Now, moving on from those bank statements and also linking slightly to it is going to be your proof of deposit. Now, proof of deposit is important for 2 reasons. The first of those is, again, lenders and mortgage professionals are going to like to see that you have that money that you're going to use as a deposit readily available to you. Now, it's going to be 3 month statements for all the accounts that you hold a deposit in. For example, if I use a ISA account to save my deposit and also a savings account, it's going to be 3 months bank statements for those. If you have it in one account, again, just those 3 month statements. Now, the second reason proof of deposit is so important when embarking on your home buying process, it's going to be really, really important to the estate agent you're buying your property through as well, because they're going to like to see that, again, you have that money readily available. It's going to make you a more attractive buyer as well if they know that you're ready to move at any given time. Now, a big mistake that a lot of first-time buyers make in their home buying journey is not getting their mortgage affordability figure first. Now, if you're submitting your application directly to a lender or using a mortgage professional, it's important to get this figure to avoid heartbreak a little bit further down the road. Now, if you are submitting it just directly to a lender by yourself, there are plenty of online calculators available that could give you an affordability figure based on your basic income and basic committed expenditure as well. Now, if you're using a mortgage professional, they may have a slightly more sophisticated bit of software that can compare lenders' affordability based on your circumstances as well. Each of these is going to give you a maximal affordable amount. Now you have that affordable amount, you can now look towards what your property purchase price might be. So you've got the mortgage figure sorted, you know you can afford it, now it's time to add your deposit on top of that. For example, if I put my income into an online calculator, it came back and said I could afford a £180,000 mortgage, and I had a £20,000 deposit saved up in an ISA account, I'd put those two together and the purchase price I'd be looking at is around the £200,000 mark. Now it's important to remember that that is likely a maximal amount of the mortgage. So you need to be looking for that property purchase price as a ballpark figure as well. Now you have your property purchase price, it's important that we discuss what buying a home and searching for that home looks like. This has changed massively in the past 10 to 20 years. 20 years ago, you'd probably look at going into local estate agents, building a bit of a relationship with them and waiting for that property to come to the market. Now, nowadays, we're very lucky because we have online portals. Now, by online portals, I mean your Rightmoves, your Zooplas, your On the Markets as well. Now, these are great tools to have at your disposal as a first-time buyer. It allows you to filter your purchase price, the radius of the location you want your property to be in, the minimum number of bedrooms, maximum number of bedrooms, bathrooms as well. So it has a really in-depth property criteria. Now it's important that we use that property criteria to our advantage as first-time buyers. Now, registering on all three portals and any more you can find is really, really important because some estate agents will only advertise on one. So you don't want to be missing out on your dream property if you're only registered on one of the portals. Overall, they're great tools. They have easy contact details for the estate agents as well if you wanted to go ahead and arrange that viewing on what could be your new property. Now that rounds up this video about my top 3 tips for first-time buyers. Please do feel free to follow me on any social media that you're going to see in the next screen, and until next time, I look forward to seeing you soon.